This video I'm going to go over what I typically see the three stages that real estate agents go through once they start making some decent money. So in this scenario, we're assuming a real estate agent makes $250,000 in self-employed income, which is going to come on the form 1099 NEC. And if they're new to it, they probably don't know that they could take business deductions, and so they just report their income as is, $250,000 of self-employed income. They'll also get a deduction for 1/2 of their self-employment taxes, which self-employment taxes is probably new for them to pay for, which is ballpark about 15.3% of this. So they get 1/2 that as a deduction. So that's about, what is that, 7.5%. Then they also get a standard deduction. This person, I'm assuming, is single, so they get a standard deduction of $15,750. Then they also get a QBI deduction. And since they're a real estate agent, they're not subject to certain income limitations called an SSTB, so they get a higher amount. There are some limitations, honestly, on this. I don't want to go into all the details, but this is just the concept of it, just the three stages that a real estate agent typically goes through. So the taxable income is right here. Their income tax is right here. And this one, I think a lot of agents miss, is that they have to pay what's called self-employment taxes. Like I said before, it's about 15.3%. And so their total taxes paid is going to be almost $70,000 if they just went this route. And the second stage is that they discover that they're able to take some business deductions, such as their advertising, their realtor fees, possibly a vehicle, their mileage, home office deductions. So we'll just assume that they get $50,000 of business deductions that they could take. Maybe there's also marketing in there. Similar fact pattern in terms of the adjustment, 1/2 the self-employed employment taxes right here. Here's your adjusted gross income. They also get the same standard deduction. Their QBI deduction is a little bit higher because there are some income limitations with the QBI deduction, even though they're not an SSTB. Don't want to go into details, but just be aware of that in case you're wondering why it's higher, even though their income is lower. And so net, their total taxes owed is a little bit better. They saved about $15,500 in taxes, assuming they had $50,000 in legitimate business expenses. But the third step is, if they're able to take the deductions and convert it to an S corporation, then they will save additional money. So they don't get any self-employment adjustment. They do get it up here with the S corporation income. The corporation gets to take 1/2 of the payroll taxes down here, so instead of calling them self-employment taxes, they're called payroll taxes, but it essentially goes in the same buckets. They get the same standard deduction. Their QBI deduction is a little bit lower since their income is a little bit lower, and also it's only factored in for this amount. And the reason for that is because you're already saving taxes on the self-employment income, and that's just how the tax code works. And so the net total tax they owe is about $42,000. So when you go from here to here, it's about $10,000 difference. There is an additional cost to get the S corporation set up, and it's an additional business tax return, but it's still a $10,000 in tax savings. And in total, it's about $25,000 or $26,000 in tax savings when you kind of go through these three steps. Now, I also work with doctors, and it's pretty similar. The only difference is that you'll notice the QBI deduction right here is about $25,000. In this scenario, since they're what's called an SSTB, their QBI deduction is going to be limited, so their tax is going to be a little bit higher. Not a whole bunch, so $72,000 instead of the $68,000. Well, I guess it is higher. And then here, it ends up being the same, I believe, $52,805. But the difference in the doctor is that they did pay more taxes when they're at this threshold of $250,000, and they reported all of their income. And when you go from this to S corporation, same tax savings, but in total, because of this jump, it's almost $30,000 in tax savings. So hopefully this kind of helps explain like the different stages that I typically see the doctors, real estate agents go through when they become self-employed. Let me know if you have any questions in the comments.